Hi, everyone. This is Rob Fox, CEO of Buckeye Dealership Consulting, with a friendly reminder that as we enter the fourth quarter, it's time to review your reinsurance company. You should do this review with your outside accountant and/or attorney. We start with looking at your corporate book. You should have a corporate book, binder, something similar to this. Even says corporate record on the front, just so you know what you're looking for. In it, it has your license, your certificate of incorporation, and another formal form that says you're exempt from taxation. Then you go through it, and it has your articles of incorporation, your bylaws that you need to sign and accept, and then your minutes. Very important to have your minutes. Every year you should have some sort of board of directors minutes, even something as simple as saying just maintaining the program we're doing. Maybe you added a product in the last year. Maybe you went from doing just warranties to CPI. Whatever it is, you should have it in your minutes that it's accepted. Also, any loans, any dividends need to be in your minutes. They need to be approved by the board of directors. It's very simple, but very important. One of the things the IRS, one of the rules we deal with the IRS is if it walks like a duck and quacks like a duck, it's treated as a duck. Every company has minutes. Every company has board of directors actions every year. And sometimes the action is do nothing, but you still document. Then as you go through, there's a section in your book for any sort of notifications. Okay, this is probably the most important section, and we're going to get back to it. But what should be in here is your 953D election. That is the most important document you can have. As we go through, we find a lot of them missing from our competitors, and you need them. And they could be missing for a lot of reasons. One, it was sent to you and you forgot to file it, or they never asked for it, or they got a copy of it and they never filed it. But you can get another one issued prior to an audit. But if you get an audit, you're too late. So we'll go through that in a minute. And then there's your portion of your stockholders. It's the ledger of all the people that are current owners, that start as owners, and then any change in shareholders. And again, there is a log in there to make sure you do it. So it is very important you keep this book up to date. Your license. So if you were domiciled in Turks and Caicos prior to 2021, you should have a copy of your license, and that license should be endorsed with every product that you are doing. So if you do warranties, you start off with warranties and service contracts, you get your original license, make sure that endorsement's on. If you moved on to CPI, GAP, any other product, you need to check your license to make sure it's on. Prior to 2022, every product had to be listed on your license. So you need a copy of that license prior to 2022. So if you're ever audited for years prior, you can show you were licensed to do those products. Remember, walk like a duck, quack like a duck. You'll be treated like a duck. If you were doing a product you were not licensed for, get in there, do some board of directors minutes, and file for it. In 2022, the Turks and Caicos started doing an all-encompassing one license covers it. If you're at the Delaware Indian tribe, you already have that same license. Now back to your 953D election. Why is that the most important? That is an election specifically for insurance companies to be treated as an American insurance company. It allows you to get a taxpayer ID number, which starts with a 98 or a 99. And it allows you then to file an 831B. If you do not do it, and if you do not have it at time of audit, the fines are exorbitant. They're $10,000 a year for not having it. And then $10,000, I think it's every 90 days after you've been noticed that you don't have it. And then you filed the wrong tax return when you file an 831B, and there are more fines and penalties for filing the wrong tax return. So please call your provider, get a copy of your 953D election. Easy to do, no excuse not to have it. They would have sent you a copy at time of getting it, and they should keep a copy. If they don't have it, there's an easy way for them to get it. It is time consuming and costs a little bit of money, but you need to get it. It's the most important document. And folks, we're seeing across the board companies not having it. You need to check your bank statements also. Why are you checking your bank statements? You do not get to choose the bank that holds your trust account. We're seeing where you're getting charged more in fees than you're paying in interest. What's that mean to your company? Well, it means that it's costing you money to do business with the bank. In today's world, you should be making more interest than you're paying in fees. That's why it's important for you to hold your trust account in your bank. You can negotiate the fees, you know what you're getting charged, and then you're also going to check online banking to make sure any withdrawals are authorized by you. So again, get a copy of your bank statement. Go over it with your accountant. Let them see it. Let them question. Are you getting paid $500 a year in interest and $1,000 a year in fees? That makes no sense to pay a bank for your money. Lastly, every single product you do, you need to ask your provider, if I send you $1, how much hits my account? Is it 80 cents? Is it 96 cents? Is it 50 cents? What are you getting charged? It might not be disclosed. It might be hidden in your agreements. You need to see it. Also, what it'll show you is ask them about a claim. If I have a claim and that claim is $2,000, how much am I getting charged? Am I getting charged a claims handling fee, a claims processing fee, any other fees that you're not aware of? Again, it could be in your agreement and you never read it, or they were never disclosed to you. But we are seeing this over and over again, where there are people out there, companies out there, they're doing reinsurance, and you'll send in a CPI claim for $5,000, and you'll look at the withdrawal and it'll be $5,150. Where is that $150 going? You need to ask. On a service contract, you get claims every day. You see a claim come through and they charge you a claim handling fee. Well, you're already paying an administration fee. Why do you need a claims handling fee? Again, very important for you to do this. These are your companies. You own these companies. You pay someone to manage them. So you give them the responsibility to form one, but you have the responsibility to make sure it's run right. So take some time here in the fourth quarter, review it. If you want a list of what we talked about today, I'll be happy to provide it. Happy to provide what you should have. They're your companies. Make sure they're run correctly. As you go through the review with your outside accountant and or lawyer, take a chance, take a moment, and look and see if you're maximizing your 831B. This year, you're able to put away $2.4 million into your reinsurance company. So as you look at your year-end numbers and your year-end, what have we done? What have we put in there? Make sure you're maximizing. Take time to look at it, and please feel free to reach out to Buckeye with any questions. Thank you.